What's up traders, John Howell here, officialjohnhowell.com, and in this video, let me move this camera forward here. In this video guys, what we're going to talk about is we're going to do another Ask John segment. Now, just recently guys, I actually had, and I can remember this, so I'm not going to read off a phone like that, but I had a post on my Facebook page, and it was from Mike, and Mike said, thanks John, you're talking about where the stochastics, the daily stochastics were getting down here at the oversold level. He said, and so he was mentioning that on there. So we're going to talk about weekly stochastics, daily stochastics, and how to put them two together. So let's get into this video.
Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader.
Alright, so let's get straight into this video now. Now Mike was saying, basically a couple of things. Firstly, he was saying, John, on my last video, I did a last video saying the daily stochastics are getting to the oversold level. We're now getting ready for a move to the high side. And that's exactly what has happened ever since I made that statement. So we have the daily here, and the daily stochastics. So this is the overbought here. So this is the 70 zone. This will be, say, the 30 zone for the stochastics. And I said the stochastics down here on the daily chart are getting down here on that chart there. Now, what he was saying, he said, John, but if you look at the weekly stochastics, we're now getting to the overbought or oversold levels, and isn't that bearish? And the answer to that is, when you're looking at weekly stochastics, daily stochastics, and how to put them together, the answer to that is yes, it is bearish, but remember, it's on a weekly chart. So two things I want to point out here when trading. We have two things. We have price action, so PA, price action. And then we have indicators. Okay, so price action and indicators. Whenever I'm doing my research and my analysis, I'm looking for trades and stuff like that, you know, literally 95% of my trading decision, 95% of my trading decision is based on price action, and the other bit is based on, 5% is based on indicators. Makes sense? So I want to make sure the formation, the charting analysis, the peaks, the troughs, all that sort of stuff is in line with my trading system. I want to have that as my price action, and then also I want to have that. And then I want to have the indicators for me to confirm that it's a good trade. So for me personally, what I do say, Mike, is this: is that yes, that is bearish, but remember, we need a price action pattern first. Okay, and remember, weekly chart, that could take weeks, sometimes months for this to start to turn down. And if the market does as well too. Makes sense? So yes, and I was saying before too, on the Facebook page, yes, what I have noticed is that if we have on any stock out there, if I look for a long signal, I've got into a long signal and I want the market to go up, we're going to buy a market. If we have the daily stochastics and the weekly stochastics both pointing up, then I found it to be really good in my trading. Really high probability. So but that's how you go in there, okay? You don't want to just go based on the stochastics itself. Basically what you want to do is you also want to align yourself with the price action. Look at the peaks and troughs, look at the strength in moves, look at the internal gauge of the market itself, and that's going to tell you what's actually happening. Make sense? So what I saw is, just recently I saw the market pull back down to around at the 17,200 mark on the Dow Jones, and I forget what the S&P was at the time, but I said we're likely to get a turning point. That's exactly what happened, but here's the thing guys, is that I saw that based on the price action first, and then I used the indicators to confirm exactly what is happening, okay? So price action first, indicator second, and that's exactly what you want to look at. That's exactly what you want to do, and exactly what you want to look at. I hope this helps you out, guys. We're looking at the daily stochastics and weekly stochastics, and this could be the same for you guys when you're trading a small time frame chart. If you're looking at, say, a 10-minute chart, and you're looking at an hourly chart, looking at different stochastics, how to time away on that. Remember, always have exact rules of what you're looking for. And what I mean by price action, it could be something as simple as this. We know the market goes in peaks and troughs, right? we know the market goes peaks and troughs. Okay, so if the market's going up, it's just generally doing this, right? Like for example, recently in the recent markets, as I do this recording, we made a big run up, we come down, made a high trough, and now we continue back up, right? So the overall market is going up. Makes sense? So the overall market is going up through there. Now, if this weekly stochastic was going to start going down, then what's likely to happen in the market? Well, we're likely to start making lower peaks and lower troughs. So what I'm saying there, Mike, is that the market, the daily chart will tell you whether it's likely to start going down, and the weekly chart will follow. You with me? So, and then obviously that's what we'll cause the daily stochastics to turn. And if it does start to create several lower peaks and several lower troughs, and really start to pull down for a couple of weeks, then we're going to see the weekly stochastics start to pull down as well. So anyway guys, I hope you enjoyed this video. I'm out of here. Remember, success can be yours if you go claim. So step up, take massive action, and face your fears today.